Hello friends, this is Sabri here. Happy New Year to all. Today I thought of giving you some important information about where to start with while investing in stock market. Many of us in stock market it's huge, intimidating. We don't know where to start. Even I was not aware where to start initially and what to start. What should be our agenda? What should be our learning curve, learning cycle? There are plenty of information about stock market, right? Regarding stocks, mutual funds, options futures, commodities, cryptocurrencies, bitcoins, whatever it is, whatever the investment it is, there is an underlying stocks. For example, if you are investing in stock market, it's stocks. If you are investing in options, again it is stocks, right? So we need to understand the traits and characteristics of stocks. It's an ocean. What should be our first step to start with? That is my focus area on this specific video. If you are simply following an analyst, you'll be relying on his education and his experience. But for long term, we need to build our own experience to sustain. Right? If you are opening a restaurant, you can have your own experience and you can open the restaurant, or you can some appoint some manager or some worker and rely on him and function the restaurant. Which one we prefer? We prefer to gain experience ourselves and be independent, right? That helps us to sustain long term. So today's video, the objective of today's video is where to start with. Basically, in the stock market, this technique, this two mandatory technique, if you practice this, you multiply your money 10 times. Before I mention about these two mandatory techniques, the step number one, you should have a methodology. What is methodology? On what basis you are selecting a stock? On what basis you deciding upon to invest in a specific stock? That may be fundamental analysis like based on P/E ratio, based on the profit that company makes for the past few number of years, or technical analysis like if it crosses the signal line in the MACD indicator, if it crosses overbought in RSI or oversold in RSI. So technique may be whatever it is. No technique is wrong and right as well. So you can go with the methodology, decide upon your own methodology, select whichever methodology is comfortable for you. Select that methodology, number one. After that, practice these two techniques. Technique number one, stop loss. I'm not going to explain you in detail about the techniques we use to place the stop loss because my objective to present this video is just to have a short video because you all people are pretty busy. I don't want to take too much time out of your day. So I want to make it short. Just I'll highlight the techniques and in the further video we'll go deep dive about each of these techniques. So regarding stop loss, there are different kinds of stop loss. ATR stop, parabolic stop and reverse, time stop, money stop. Why we need to focus on stop? This will help to cut our losses. In stock market, we should reduce our loss and run our profit. Right? So step number one, the first significant one is have a method. After that, we have these two technique. In this, out of these two techniques, the first technique is stop loss to reduce our loss. Step number two, we should have a trailing stop loss. So once the target is achieved, you will have a target where once you select a stock and once you enter the trade, you will have a target, right? This is specific to traders, not about investors. But traders, they'll be having the target. Once the target is hit, you should establish a trailing stop loss. There are many ways to establish trailing stop loss. That is ATR method, moving average method, trend line method, Chandler exit, etc. Why we should have a trailing stop loss? It will help to maximize our profit. So let us see a couple of examples. Why should we have stop loss and why should we have trailing stop loss? So in our KGC example, so my target is $10 for KGC. Once the target is achieved, I exited the trade. But again, my as per my calculation, my second target is around $15. So after this red candle, I entered the trade, but without a stop loss. So around 9.16, I entered the trade, but without a stop loss. So what happened? I lost that fixed committed amount on KGC because from $9 it came down all the way to $6. I was not an investor, I was a trader. I invested in a call buy option and I lost all my committed capital because of not having a stop loss. Let me give you one more example. In this case, I clearly see a double bottom. What is the concept of double bottom? Will from the bottom to the neckline will measure, and I measured, and based on I take this arrow and place it at the neckline. Oh, this is the target. This is my target. Around 208, 209 is the target. With that expectation, I entered around this place at the peak to 198. I entered. I actually had my stop loss around 191 and I exited the trade. But if I wouldn't have placed the stop loss, I would have lost much more money, right? The stock reached around 185, 186. Right? That is the significance of having the stop loss. This will, without stop loss, the stock I entered around 198. The stock, the lowest bottom is 186. So this stop loss helped me to reduce the loss. My actual stop loss was around 190. This helped me to reduce the loss. This is with regard to stop loss. Let us see a few examples for trailing stop loss. For Spotify, based on the box strategy, I entered around 178. So once this breakout happened around 209, I exited the trade because my target was that I exited. But if I would have placed the trailing stop loss, instead of exiting at 210 or 209, I would have exited at 262. Would have made a considerable profit, right? So when we use the trailing stop loss, we use this moving average technique for trailing stop loss. Whenever the price retraces to the moving average, then we'll close instead of having a specific target. So as I was not following that specific technique, I closed at 209 and missing all this opportunity. From 209 to 250, I missed the opportunity. And let us see one more. In MasterCard, my target was 339. 339. Okay. So once the price reached 339, I exited the trade. But if I would have used this moving average trailing stop loss technique, when should we close the trade using this moving average trailing stop loss technique? When the price retraces and touches the moving average line. So where it touches? Around 350. I closed at 339. I missed the opportunity of $10. Right? $10 if I $10 is the opportunity I lost if in case I purchased one share, but if I purchased one option contract, I lost $10 multiplied by 100, $10,000, right? That's huge, right? That's why we need to have stop loss and trailing stop loss. There is no question of winners and losers in stock market, because there are only losers in stock market. I mean, big loser and small loser. Those who make big mistake and those who make small mistakes. So this two technique, two techniques, stop loss and trailing stop loss, will help you to be a person who make smaller mistakes, right? Particularly, I want to highlight one thing. The best time to plant a tree was 20 years ago. The second best time is now. This is a Chinese proverb, and this pretty much applies to stock market. Either investing in the stock market or learning and empowering yourself with regard to knowledge in stock market. Opportunities are always there and always will be there. Remember, Tesla was around $300 and reached till $2,000. Again, it came back to $300. Now it is around $700. Again, it will come to $300, but the opportunity knocks again and again. Are we ready to grab the opportunity? That's the $1,000,000 question. Continue invest and empower yourself, and subscribing to this channel will be golden. Thank you, friends. Bye bye.